An important area also to consider when you start in business is vehicles, cars, commercial vehicles. Again, it's a question I'm often asked insofar as what is the tax deductions, how do I go around claiming sort of relief for vehicle expenditure. If you're a sole trader and you've got a car and everything else, then basically what you can actually claim, two options. You can either claim a percentage of the actual costs of the vehicle, so that would be things like the road fund licence, repairs, fuel, that would be in line with the business use of the vehicle. You can also in that scenario claim what's known as a capital allowance, which is based on the cost of the actual sort of vehicle. And that allowance is determined, as everything is these days, by emission factors. So if you've got quite a high emissions car, unfortunately you don't get much of a capital allowance, only 8% in fact, which is quite a small amount. So it'll take you about 30 years to get sort of full tax relief on the cost of the vehicle. If it's a low emission car, where say the emissions are below 95 at the moment, then you can write off the whole cost of the car against your profits. That's one assessment. We then need to marry that up against another option is to claim business mileage. So you can claim a reasonably generous rate, 45p a mile for the first 10,000 business miles in a tax year, dips down to 25p a mile thereafter. And it really is an assessment. Can't swing around from method to method. You need to make an assessment when you start in business, which is best for you. Often it tends to be the formal one insofar as claiming a percentage of the costs. That's when you're a sole trader. When you're a limited company, there are other considerations because the company car benefit rules come into play, and often in that scenario it makes sense not to have a company car unless it's a low emissions car, because otherwise there's some quite nasty tax charges which would apply on you personally. The other consideration is also commercial vehicles. If you're buying a van for your particular business or a truck or these double cab sort of pickups, they qualify and be taxed as a van, and you get some more generous deductions. You can basically write off write off the whole cost of a van or a vehicle against the profits in the year you actually buy the vehicle. Also, one thing to watch out for is sort of leases, how you're going to buy the car or the vehicle or the van. Different tax rules apply if you do it on a lease or a hire purchase sort of basis. A lease, you tend to write off the cost of the actual lease payments each month against your profits. If you do a hire purchase, then you get to write off the whole cost of the car, or depending on the emissions factor. In like if the emissions are below 95, you get to write off the whole cost of the car against the profits in the year you sign your hire purchase agreement. One other thing just to watch out for, just to finish up on vehicles, which is a nasty little trap which a lot of people fall into. If you're doing quite well, you're VAT registered. VAT is not generally recoverable on the purchase of a vehicle, on the purchase of a car, unless the car is used exclusively for business purposes. If it's a van or a commercial vehicle, then yes, you can recover the VAT, but not on the car. It's a rather nasty trap which some people do fall into. You've then got to pay back the VAT with a penalty as well to the revenue.